So just keep that in mind, folks, is that those of you that are thinking about whether you're swing trading or not, be ready to just sit on your hands. There's nothing wrong with not doing anything. Sometimes that's the best thing to do.
Bitcoin has witnessed a major bloodbath. We've got a whole lot of bearish trend since we touched 69K last year. Bitcoin even came down all the way down to 25K earlier this month. And so, in this interview, we'll look at what Gareth Soloway thinks is the next significant move. He's going to share his honest take on the crypto market. If you don't know, Gareth is one of the only people who predicted the current bear market for Bitcoin, and since then he's quickly become a legend in the crypto sector. He's going to talk about when the bear market is going to bottom, and he'll also talk about other altcoins that he's looking at. And finally, he'll look at his price target for Bitcoin. If you want to hear his comments on Bitcoin and the crypto market, then watch this video all the way to the finish. And don't forget to press the like button and share your thoughts on Gareth's interview. Now, let's take a look at it.
What is your take given this fall we've had? What do you think is happening now, and what are you looking to happen next?
Yeah, so it has been a tricky market, and it's not just the crypto market, the stock market. Many markets out there have been struggling because as the Fed's been pulling back on monetary policy, they've been sucking liquidity out of the system, right? So you have less money in people's pockets, in people's accounts. Higher interest rates mean people can borrow less to invest. And ultimately that creates a scenario where asset prices are going to decline. The Fed kind of, choreographed this in late 2021. They said they were going to do it. I think a lot of investors kind of didn't believe them because in the past they've always been soft with the markets. In other words, they didn't worry about inflation because there wasn't inflation. Now there's massive inflation and they have to actually be hard with the markets, kind of that strict parent at this point in time. So I think at this stage of the game, you have to continue to be very careful. The Fed is certainly not done doing what they're doing. The question is, at what point do the markets factor in a worst case scenario with the Fed? Meaning that at some point the market will say, okay, they may raise 10 times or 12 times, and then that'll be kind of the maximum. And the Fed may come out later on and say, hey, we're only going to do 8 times or something like that. And that's where you get a bottom in the markets. But unfortunately, we're just kind of at the beginning of this cycle, it seems. And unfortunately, the beginning of the cycle has already seen a massive decline in crypto prices, stock markets, and so forth. So I would just suggest in terms of the overall market view, continue to be very conservative. There's nothing wrong with being in cash, especially the dollar's been relatively strong, even though everyone's worried about inflation. And again, wait for the opportunities. Wait till you really see a bottom forming, then start to deploy more capital.
What would you say to folks right now who have lost a whole bunch of money? What should they be doing with their portfolio, if any is left?
Yeah, so the first thing I'd say is welcome to the club, meaning that it's not fun, but each and every one of us as a starting investor, we go through this, right? So we go through initially starting to invest, thinking it's the easiest thing in a bull market, making lots of money, being like, oh, why didn't I do this 10 years ago? I'd be a zillionaire by now. And then the market goes into a bear market and we get punished. So, it's not a great club to be in, but I think every investor has been through it in their early years. And the hope is that you learn from it, right? We all have to learn from it. For me, I've been through it multiple times, 1999, 2000, 2007 through 2009. And then there were mini bear markets along the way. And so I've been burned enough times where I kind of saw the signs, the writing on the wall, when there was insane euphoria. Everyone just thought it was the easiest thing in the world. You had GameStop, AMC, crypto prices going insane. And I started to pull back and I said, all right, listen, I got to be more careful here because I remember touching that hot stove and how much it burned me in terms of my monetary wealth multiple times. So I think that's the key, is just to say, okay, it will come back. It may take a while, but ultimately I do think it comes back, and you just have to be protective. Don't try to make it up in one trade. The market is never nice to us, those of us that try to do that, right? So we have a scenario where like you said, Steve, is people want to make it up so quickly. And the essence of it is bear markets will punish those people and you'll end up even down more in your accounts. So be patient. Always remember the markets will go lower than any of us think, just like they go higher than any of us think. mean, if you look at the charts on GameStop or AMC, I mean, who would have thought those stocks would have gone, GameStop going to $300, $400 a share from $20 or $15? I certainly never thought that. And so on this downside, stocks and crypto prices will go a lot lower than any of us think. I know when I started calling out 20,000 back when we were at 65, people thought I was nuts. Then it got to 50, then 40, and now 30, and even sub 30. It's just the nature of bear markets to take things down and whittle away the average investor. The way you know it's a bottom is when everyone else doesn't believe there is a bottom left. So anytime you hear people saying, oh, that maybe this is the bottom, maybe I should start buying, it's probably not the bottom yet.
What I would love to hear, Gareth, is what's your trade right now? Are you in the market? Are you waiting to make a trade? Show us in the charts what you're looking for and walk people through your mindset as a professional trader.
In terms of Bitcoin, I do have a little exposure to Bitcoin. I have about 12% of my portfolio long Bitcoin right now, basically break even right in this range here. And the reason is, and number one, notice 12%. I'm not saying 50% or 100 or 10 times leveraged, right? So it's understanding that we're in a bear market, which is number one. So it right away tells me not to go in heavy, right? The number two factor is really always the charts. It's not how I feel. Well, what does my gut tell me? All that is nonsense, right? In the trading world, the market doesn't care. The charts don't care. They're going to do what they want. They're going to abide by themselves. And so again, it's all about the charts. And what I did was I found this. So we had this bearish kind of pattern development that was, I think the last time I was on, we discussed it, right? It was this big move down. It was this sideways chop, which was bearish. And then you finally broke lower. And what I found is you have this new parallel trend line from here to here. And it actually, when we panicked with the UST collapse and the Terra Luna collapse, it pierced this line right here and then got back above. So basically at this stage of the game, I looked at that and I said, okay, well, we are at support. So there's technical support right in here, this trend line. As long as we hold that trend line and don't confirm below, I'm going to be a small bounce player on Bitcoin. Now, important to understand my time frame. This isn't something where I'm saying, okay, guys, I'm buying here for the next 5 years. This is a swing trade, which generally you hold for weeks or a couple months. And it essentially anticipates that as long as we hold this low line, there's going to be potentially upside. So right now, for instance, if we look at the chart, you can kind of make a case that you have this downsloping trend line on Bitcoin, right? So the idea is you have actually an upsloping as well. You're creating this little flag pattern, and based on the oversold nature, and as long as we hold this lower white trend line, I'm going on the likelihood, the slight probability that we're going to have a move up. Now, again, targets are not that high, to be clear, right? So before you get in a trade, you always want to say, okay, if I'm going to enter this trade, what am I going to put at risk? Where are my next ads if I need to? Where am I going to exit the trade if it doesn't work? And then ultimately, where are your targets? And targets are important because you don't want to go into a trade that's a swing trade and say, hey, I'm looking for 65,000. That's unrealistic, and you'll be holding it when the next wave down comes. So instead, what I do is I just look at previous pivots. So for instance, we have one right here that's at basically 33,000. All right, so that's my short-term first target. And again, there's your little trend line. So if we break above here, I'm probably starting to take a little bit off the table right at 33,000. Your next pivot is just above that at 34.5. I'll probably take a little bit more off there. And maybe what I'll do is I'll hold a tiny bit just in case we rally all the way back to what I call the scene of the crime retrace, which is back here. So this was your initial breakdown trend line here, and this would be a retrace to that level. So again, notice how I'm not getting overly ambitious or aggressive in terms of my price targets. I'm looking to leg out, which is basically where you take some off the table in a small profit, another a little bit more up, and then maybe you hold that small amount just in case it makes a bigger move. But none of my targets are like 60,000 or 65,000 here. There's too many resistance points ahead of me. I'm not expecting that. So basically, again, it's a very calculated. Everything a smart pro does is very, very calculated. Steve, I know you do this too. And it's all about really understanding risks versus rewards, understanding exit points versus targets, and really looking at the chart and saying, okay, what am I going to do right in this scenario? And obviously, number one is always putting the smart amount of capital to work, not the over-aggressive amount of capital, right?
What if we were to get above that quote-unquote scene of the crime at 42? Would you become more bullish, or would you still be hesitant?
So basically, I would become less bearish at that point. There's no doubt about it. So you had this bear flag breakdown right here, right? So that took us down. Now, if we were to somehow recapture that area, I would start to say, wait a minute, this is an impressive reversal in the charts. It's something that we have to pay attention to. The bigger level for me, and what's interesting, these lines could actually merge, is see this upper trend line sloping down, right? So that one, maybe this lower scene of the crime level is going to be sliding up. This is going to slide down. They might meet around 42,000 or so, depending on at what point price maybe gets up there. Now, if you got above both of those, then I would certainly get a little bit more intrigued in terms of becoming more bullish. So there are absolutely levels, right? As a technician of the charts, you never want to be all bullish all the time or all bearish all the time. Just like I'm talking here is like, I'm actually, even though I'm net believing we're in a bear market, we're headed lower on Bitcoin, I'm actually short-term slightly long Bitcoin. So you can be kind of contrarian in those views, even when you have a midterm or longer term view that might be the opposite. So I think that's important. But yeah, I think if it did trade above this and this line, I would then start to become more intrigued. I also think that you have to recognize this upper line will be resistance, but it is sloping up, right? So it's already at 52,000. You could be 6 months from now, that could be at 60,000. And so again, you start to get these lines where if they break, the next resistance levels get higher and higher and bring us close to those all-time highs at that point. I don't think that's the likely scenario, Steve, but it is important as a trader to always look at all angles. And so a lot of people say, hey, all these people that bought at, 5,000 or 10,000 on Bitcoin are doing so much better than swing traders. That's actually not necessarily true. Because again, as a swing trader, if you're kind of going long and short at the levels, going short up here, going long down here, short up here, long down here, riding it up, and vice versa. If you're playing all these ups and downs on the market, and this was a big one for me, I went, long, short, and then, long here for a mini bounce, and then again, the drop, and then we're long again here. The idea is that if you can make 10%, 10%, 10%, 10%, you can actually outperform people that are investing for the long term. But again, it does come with some risks. Sometimes they go against you, the trades. But then again, in a bear market, people that bought at 60,000 are down over 50% of their money. So again, a swing trader usually doesn't have those risks because we're in and out so often. So I think for the most part, swing trading is something that anyone can do, but I do recommend, as always, education. Start understanding a little bit more about the markets, the charts, at least so you know when traders are giving you trades. Is this a smart trade? Does it make sense? Is it at support? Those type of things. So just keep that in mind, folks, is that those of you that are thinking about whether you're swing trading or not, be ready to just sit on your hands. There's nothing wrong with not doing anything. Sometimes that's the best thing to do. Now, in terms of downside, right? So this is where it gets tricky. So ultimately, my guess is there is more downside. We probably will break below this trend line here at some point in the future. Notice how this trend line kind of coincided with the supports from over here, right? So if we put a trend line in here, and let me do that a little bit better here. So you can see right in that range as well. Once this level gets blown through, which is also this area, then you get the bigger move to the downside. And right now, I have two targets on either side. One is the kind of the upside, the high end target, which is going to be this 20,000 level right here. Okay, so 20,000 would be my high end. I'll throw in a trend line right there. Okay, and then the low end I have right now is right around 12,000. So again, in terms of the chart, it would be right down here, give or take. And just to describe the couple different levels. Number one, if we get to 20,000, that's the 2017 high. That's going to represent a major support for the market. Now, again, that's my high-end target because I do believe that we're in a .com type collapse. I do believe that we're in this scenario where we're going to see a washout in cryptocurrencies. So it very likely 20,000 is not going to be enough to wash people out.